presenters today, of course, are Gary Schnitkey, agricultural economist here on the University of Illinois campus, and Todd Hubbs from the University of Illinois. And both are going to be taking up some important decisions that you're making right now, if you haven't already make them, or are in the process of maybe weighing these out. Acreage decisions for 2020. Todd Hubbs, thank you for being with us. I'll let you get started for the day.
Thank you, Todd. Well, we've seen cash prices here in Central Illinois deteriorate quite a bit for corn and soybeans since this, stay in place lockdown for the coronavirus pandemic's taken off. And you can see this in this graph, the deterioration. We've seen a little bit of recovery in soybean prices, but the demand issues with ethanol with corn is going to continue to be pressure. And we've seen a bit sluggish soybean exports over the last few weeks, which is to be expected this time of year. Right now, when we look at harvest cash prices here in Central Illinois, we're seeing corn prices around $325 to $330, and soybean prices around $830. For the foreseeable future, I mean, we're getting a little bit of rally today, but under the kind of demand destruction we're probably going to see for the next couple months in corn, and the kind of demand we're seeing in soybeans, this may be relatively stable until we come out of this. The uncertainty around how long this is going to last and the economic damage is hard to ascertain right now, but it doesn't look good for the foreseeable future. You click the next slide, Don. So we had the March Prospective Plantings Report last week, and it came out with 97 million acres, 96.99 million acres of corn, way above what most people thought it was going to be. And folks, I'm here to tell you, if we plant 97 million acres of corn and have a decent year at all, we're going to be swimming in corn in 2020, 2021. USDA had soybean acres about 83.5, and wheat is around 44.65, 44.7 million acres. I got rounded there in this graph. Will we see corn acres come back a little bit? We typically don't see a huge shift from the March Prospective Plantings Report. Normally, it's less than 1 million acres. There have been times when it's been more than 1 million acres. And the prospective profitability of corn and beans for the 2020 marking year is something to think about. And that's what we're going to be discussing here today. Illinois is putting out about 11.3 million acres of corn this year, which is up 800,000 acres from last year. But Iowa said they were going to plant about 14.1 million acres of corn, which is a huge number. When we look at the breakout of corn, about 89% of the corn expansion over last year is in the Corn Belt. And so if we see corn acres come back, it's going to have to be decisions made in the heart of the Corn Belt in all probability. So we have a question. Have your expectations of plant acres changed since the first week of March? You can answer this poll for us. I'm going to talk over a little bit. We did see a soybean to corn price ratio that was quite a bit lower than what we're seeing right now around the time the survey went on. And, if China meets their phase 1 trade commitments at all, I think we could add a few soybean acres and not punish the price. And I'm optimistic that's going to happen, but let's see what you guys have to say.
So the poll is going on. So take your look here. First week of March, we had expectations of what was going to be planted. Now we're in second week of April, and so what do you think is going to happen here? We got quite a few people voting here, so we'll give you a couple more minutes, and then we'll show you the answer to the poll.
So everybody always knows, Gary likes to know, Gary, how many we actually have on hand that are available to take the poll, and we're approaching 300. There's not quite that many, but getting pretty close at this point. So that's how many we've got taking the poll. About half, bit more of you than that have taken it so far. Go ahead and answer that question. Have your expectations of planted acreage changed?
And here are the answers. 5% more, 5% more. 39% of you believe fewer corn acres, more soybean acres, fewer corn acres, more than other crop, if not soybeans. And 43% of you are holding steady here, no change. So appreciate your poll. We'll have a couple more of these as we go through here. As Todd mentioned, price bids now for fall delivery are close to $3.30 for corn, $8.30 for soybeans. What I'm going to do for the next while is take you through some budgets and show you what that $3.30 for corn and $8.30 for soybeans do to our budgets. By way of comparison, we're calling those our after COVID-19 prices. So those are what are present today, or what bids look like today. Corn before this was $3.90, or $3.90 was a decent corn price, or what we were using in our budgets, and $9 for soybeans. Again, hopefully those $3.30 and $8.30 prices will not be what we get, but that is currently where we are at here. Several other points here is that we're likely to see production costs lower in 2020 as compared to 2019, and we'll discuss where those will happen. PLC and ARC will make payments, but we got to remember that those are decoupled, so we shouldn't be making acreage decisions based on PLC or ARC payments, particularly ARC County payments, unless you have a farm that's ARC IC. And the shifts in acre, and this Todd may disagree with this, but it's what we're looking at now are probably marginal shifts to and from corn and soybeans. Here I'm gonna go through the budgeting procedure now and talk about cost. One of the items that we've heard a lot about is a lot of energy costs coming down. And obviously, we're going to see less fuel demand, less crude oil demand. Typically, over time, that results in lower energy-related costs, particularly on nitrogen, fertilizer, fuel and oil, and drying. At this point in time, though, we haven't seen a lot of decrease in anhydrous ammonia prices since the spring. January, February, and March, here you can see March Illinois Production Cost Report, AMS report, reported anhydrous ammonia prices in Illinois at $503 per ton. That is down from last year's levels, but roughly equal to 2018. If you look at our budgets for 2020, we're going to put our fertilizer cost roughly at 2018 levels. DAP prices are down as well, and potash prices are a bit higher right now. One of the points I would make about most of our production cost is a lot of them have already been priced into place, so probably not looking at much change on the production cost side for our budgets at this point in time. We got a poll question. We are using a $3.30 expected corn price for 2020. Do you believe, or what's your expectations here? And again, that $3.30 corn price would be what we are using. And again, that's pretty close to what fall delivery prices are going to be. So tell us what you think we're looking for 2020 expected prices here. So we're getting close to the end of the poll here. Roughly over 50% of you have voted, and we'll show you the results of this here fairly soon. We'll call you done here and show you the results of the poll here. Again, 60% of you voted out of over 300 now. Most of you are, well, we've got a wide flat distribution. Very few of you believe we'll get close to $4. 36% of you are a bit more optimistic, 36%, 32% think that's about right, and 27% of you are a bit more pessimistic on corn prices than we were here currently. All right, one more poll. But all right, so we're also using a $8.30 price. Do the same thing here for soybean prices. We're launching the poll right now. I think Jim has it up there, so vote on our soybean prices. Again, we're just getting a feel for what you're thinking about the prices that we're using here. Again, $8.30, $8.40. Might have seen a little bit of rally today, but $8.30, $8.40 was what fall delivery bids were. So we'll again get a feel for what you all are thinking here as far as our prices look like today. And so we got almost 57% of you voted. We're going to cut off voting here in a minute, and we did that. And here's the results. Again, fairly flat. More of you are a bit more optimistic about soybean prices. I guess that would match where we are at as well. Todd may want to chime in here, but
Yeah, I'm a bit optimistic on them. If we stick with this acreage, and I agree, I think we're going to see marginal changes in corn and soybean acres in all probability. And I think we'll see. I think we're seeing strong crush, and we will continue to see it. I think we'll see strong exports in 2021. So, yeah.
Again, 41% of you think 850, 18.9, and 18% are lower prices and near $8. Again, those are the prices that we're going to use in our budgets. As I mentioned before, we've seen fertilizer prices come down. We are going to be using fertilizer prices near what they were in 2020. Here I'm showing our cost in northern Illinois. Last year, FBFM would say that fertilizer cost in northern Illinois were $134. We're going to use $125 in our budgets, again down close to the 2018 levels. Drying, we're back down to 2018 levels, $815 per acre here. We were up close to near $30 last year. Late planting is the primary cause of that. Again, our fuel costs are coming down. One of the things that we did note this year as we looked at 23 through 2019 is that interest costs did go up from $23 an acre to $26 per acre. We're holding that the same as we're moving forward into 2020. Those interest costs, that's not large. That's not particularly alarming that this went up, but it has gone up. And again, we're likely seeing more use of debt, more use of operating lines of credit, and we'll likely see that continue into 2020. We decided not to raise interest costs on non-line because interest rates are relatively low right now. The other thing, so we have $3.30 corn, $8.30 soybean prices. Those prices will kick out PLC payments for 2020. Remember, though, that 2020 PLC and Ark County payments are not, and again, not impacted by 2020 decisions. It doesn't matter what is planted on the farm in 2020. Those payments are made on base acres. Yields don't enter into the formula for calculation of PLC yields. Ark County, obviously, county yields enter in. So the word of advice here, don't plant to get PLC or Ark County payments. Ark IC farms have a little bit different decision because those crops that are planted on those farms will be impacted. If you have an Ark IC farm, it will be impacted by 2020 planting decisions. If anything, you might want to shade more towards soybeans on those Ark IC farms. Ark IC, and the reason why Ark IC, there won't be any payments there as of yet, but Ark IC, the benchmark price, if you will, or the 5 prices that are being used is $9.25 compared to $8.40. So that decrease in price there could cause Ark IC to make payments for soybeans this year. Again, we're way too early, and I wouldn't let that impact decisions. Again, for PLC and PLC payments, here's sort of, if we think that our 2020 market year average price, and again, 2020, so that would be the one for corn and soybeans that begins at September, goes through August, $3.30 for corn, $8.30 for soybeans. Those both would be below our effective reference prices of $3.70 for corn, $8.40 for soybeans. Payment rate would be 40 cents for corn, 10 cents for soybeans. And if we use sort of a average bushels, PLC bushels per acre, we would be looking at something like 180 bushels for corn, 50. That would result in a $61 payment for corn, $4 payment for soybeans. We're using about 30 in our budget, so it's an average of 61 and 40. Again, we're way early. A lot of farms probably took our county for soybeans. At this point in time, you would not be expecting our county payments in 2020. Again, those payments will be received in 2021. You wouldn't be expecting those 2020 ARC County to make payments unless we see yield reductions. So those are where we're at as far as ARC County and prices here. I'm now showing a budget here for 2020. Central Illinois high productivity farmland, 215 bushel yield per acre. That's a trend line yield, which is slightly higher than our yield from 2008, but below our yield from 2018, 237 bushels per acre. So we're projecting a 215 bushel yield. That will be below sort of the average from 2016 to 2018. 330 price per bushel gives us 710 revenue, $30 ARC PLC payment. We are not putting a MFP payment in these calculations as of yet. So that would compare to 82 for last year and $1 in 2018. And crop insurance payments would not, and I stress this again, would not be kicking in at this point in time. We haven't seen enough price declines. Our projected price for corn is $3.88. Currently, the December price is $3.52. That's only 90%. We would not be expecting to see payments from that unless we had some sort of yield decline. We have our non-land cost in here at $571, down from last year. Cash rent in here at $275. This gives us minus $106 return. Obviously, that's not a good return and would be below our 2018 return of $20, which $82 of that, by the way. If you take away 82, you're at minus 60 last year and $8 in 2018. So we asked the question, well, what could cause us to increase our returns here? And we have three scenarios that we're going to project. We go back to trend line yields, 235 bushels. Everything else remains the same. We get up to minus $41. So still negative there, but increase of about $60, $66 per acre, $65 per acre, given this 235 bushel above trend yield. What if we had a $3.90 price, go back to our 215 yield, we get up to $23 per acre. So that would be a reasonable sort of return here. Then get our $80 payment. And obviously that takes us back to minus $27. I guess the difference here between this year and last year, if we were sitting here last year, we would have probably been putting in, or we were putting in 210 bushels here and probably about this price, and the MFP got us back to positive. We're going to have two things happen this year that will cause us to be more positive. And just what those might be is a 235 bushel yield, $80 MFP payments, and we get back to positive and sort of get back here to 2019 levels. If we get sort of a combination of 330 price, MFP, or MFP plus like payment and above trend yield. Again, we're a ways away, but those are the sorts of things that we have to be looking for positive returns. Here it is for soybeans. Soybeans, we're using a 68 bushel yield. Again, above slightly last year, below what we had in 2018, $564 of crop revenue, putting in $30 of ARC PLC. Again, we're averaging that over corn and soybeans. It did not vary between corn and soybeans. Decisions don't matter. Again, crop insurance is not coming in yet. We've again seen declines in crop insurance prices. Our projected price is $9.17. We're currently looking at our November contracts for soybeans. CME contracts are trading in the 860 range, still above 90%, so there wouldn't be crop insurance payments. Non-line costs are down minus $40 of net return. Again, I would point out this minus 40 is less than this minus 106. So we're soybeans relatively more profitable than soybeans or corn, excuse me. And then let's look at the scenarios that would cause this. 74 bushel yield back to trend line gets us to a $10 profit here. So that's one thing. $8.90 price back to our yield, we get to $1 return. And if we get our $80 payment, we get a $40 return. So there's more things, more reasonable things, if you believe our scenarios, that can push you up above for positive returns on soybeans. Again, at this point in time, you sort of lean towards soybeans after what we've seen with the demand destruction in corn and everything COVID-19 related. All right, we got a question here for you. What is the chance of an MFP-like payment in 2019 and federal?
In 2020.
2020, yeah.
You're behind
Sorry
a year.
2019, 2020, 2021, they all get blurred in your mind at this point in time, particularly given that you're staying at home and going nowhere. So it's very, very difficult. So we're going to see what you guys think about federal aid, and you're voting. 50% of you have voted, so take a couple minutes here. Again, as you look at our budgets, that MFP-like payment will be pretty critical to getting us back to the point where we have some semblance of returns that aren't going to cause a large drop in financial health. So 59% of you voted. We're going to show you the results right now. You should be seeing those results. 10% of you expect no aid, and then we're roughly divided. Half and half of those that expect aid. 47% expects something like 2019 and 2020, which would be roughly $80 in Central Illinois. Somewhat less in Northern Illinois, 60 to 70 in Northern Illinois, and 50 to 60 range in Southern Illinois, and 43% of you expect more. Again, given our budgets and where we're at, we would expect that sort of to get you close to, or help you get closer to zero profit at this point in time. Again, we have to see those profits above positive, and for us not to see financial deterioration. Here's where we're projecting 2020 to be. So below that, again, we would have to see some, and here the important thing, I suppose, right now for decisions is that corn is projected less profitable than soybeans. Again, we're below our cash rent, so this would result in negative returns. This is this minus $101 for corn, $40 for soybeans. Again, you can see here where those bars have been over time. This projection would be worse than 2018 and 2019. Again, our 2018 and 2019 results ended up to be highly impacted by MFP payments. Those MFP payments are listed there, so you can sort of see where those ended up. Again, at this point in time, corn and soybeans below cash rents on our average cash rent farms. So we would like to thank our sponsors here for making FarmDoc possible: Compier, Illinois Farm Credit, Illinois Corn Growers, Growmark, and Farm Credit of Illinois. I think I might have said that, but make sure I did, and TIA CREF. We have two more webinars coming up tomorrow: crop management outlook, and then Friday, impact of COVID-19 on agricultural assets and lending markets. We'll have Jake Jackson, Todd from Farmer Mac and Bruce Sherrick with us on Friday. So thank you, and remember to submit your questions, and we will take those questions now as we're looking forward through them.
Yeah, indeed, we will. So if you have questions, you can submit them. That'll be in that gray section, either on the left-hand side of your page or potentially on the bottom if you're working from a tablet or certainly from a phone. Go ahead and put those in place. Gary Schnitkey and Todd Hubbs will be glad to answer questions for just a couple of minutes here. I think the ones we've gotten so far, Gary, are pretty simple and easy to answer. When you were working with cash prices, those were season's average cash prices for the 2020, 2021, or the coming marketing year, right, for the crop that's going in the ground?
Yeah, so those represent that 330 would be sort of a market year average price, for the 2020-21 year. And we're also using that as a cash price as well. So sort of equivalent there. Again, a 330 would be below our 370 reference price. Note that the harvest price for our December contract, the 330 price would be thinking it would be something above that. And most likely it would be in the 350, 360 range. And again, our projected price for this year was 388, so that would not be triggering crop insurance payments without some sort of yield decline.
And Todd Hubbs, just for reference, the 2019-2020 season's average cash price you've been working with on the S&T tables for the current marketing year, the corn that's in the bin or soybeans that are already sold, one of the two, you're where at 355, I think, after the 97 million was released?
Yes, around 350 to 355. Yeah, I remember we had higher corn prices through the first half of the marketing year and this weakness right now. And we've marketed quite a bit of the crop already. There's still quite a bit out there though. And these lower prices we're seeing right now are going to pull down. I think USDA is projecting 380 right now. It's going to pull it down quite a bit for what's remaining. In 2020, 2021, I've got a seasonal average cash price for corn at 335, but there's a lot that goes into that. Mainly, I have slightly fewer corn acres than the 97 million we're planting, but also there's an assumption there that we're going to come out of this near the end of May, so the demand destruction in ethanol, while severe, won't be catastrophic, and we'll carry in slightly less than 2 billion bushels in the next year. And I'm assuming a slightly lower trend yield than USDA is assuming. And so we're not going to see this, but we're shaping up in 2020 to have a massive amount of corn supply. And sorry, Gary, go ahead.
No, I was just going to say, yeah. We had a question. Oh, I'm sorry. Go ahead, Todd. I'm talking over you.
That's all right. There's a lot of uncertainty on this. I personally didn't think we would see the economic shock get this bad 2 months ago. I think it's prudent to thinking maybe this will be worse moving forward than we currently see. It's hard to say how many, restaurants will survive, what kind of unemployment we'll see moving forward, what that's going to do to meet demand. It doesn't look good. And so I'm at 335. But that's assuming somewhat of a V-shaped recovery. If we see a more of a U-shape or plateau shape with a huge crop we're going to see, it's very easy to envision cash prices this fall below $3 and, struggling to get back in there. Now, at those levels, I expect to see strong exports and strong use across the board for corn. But, the most we've ever used in a marketing year is about 14.8 billion bushels. So, if we're carrying, 18 million bushels of supply for some reason, we're looking at carrying out in 2021, over 3 billion bushels, and that's brutal. For soybeans, I got 2021 cash prices at 855, and much like with corn, it's the same kind of assumptions. I do think China will try to meet their phase 1 trade commitments, They have been buying from Brazil, and I always thought that was going to be the case this time of year. That's why we're seeing somewhat sluggish export numbers. But I think as we move into next marketing year, they will be there to buy beans from us. And, we're seeing decent crush, and I think crush will still stay above the 2 billion bushel mark. So, if we just add a few, million acres to beans, I think it's a place where we can see strong prices. But it really, for me, depends on what the macro environment looks like and how long, if this turns into a major extended recession, we may be in a different place. The uncertainty is large. Gary, you can.
No, I was just going to add here, we had a question here. What happens to our analysis if we do this at 20-cent lower corn and 20-cent soybean prices? We do that in our FarmDoc Daily, which will be later today, and it doesn't look good if we lower our prices from 330 to 3 or along that line. For corn, you would obviously be taking 30 cents off the bushel price. I'm not sure if that triggers a crop insurance payment yet. It would be getting close to triggering a crop insurance payment, but not necessarily. The other thing is that PLC payments, it's not going to be a one-for-one substitution. If you think the crash price is going down, PLC will go, payments on corn will go up, but you got to remember on our PLC payments that they're based on a lower yield than most people are experiencing. So I would put a PLC yield in Central Illinois at 180 bushels per acre versus we're probably looking at 50 bushels, 40 bushel higher yields. On that 180 bushel PLC yield, we're only getting payments on 85% of the bushels. So PLC does not act as a stopgap. It obviously will cushion the losses, but $3 corn and $8 soybean prices don't look good there.
Gary, just a couple of more things. Todd Hubbs, we put a couple of questions on South America, the competition there. One of them is related to currency, U.S. dollar versus the Brazilian real. And the other is what happens if COVID-19 begins to close the export markets there.
Well, we have seen the real weaken significantly against the dollar over the last month. I think it's somewhere in the range of 19 to 20%. It's strengthened a little bit in the last couple of days, but it's still very weak. And they're very competitive, and they had a huge soybean crop. We're seeing that. Now on the corn side, they exported a lot at the end of last year. I think they ran themselves pretty lean. Much like us, they're not driving as much, so it sounds like their ethanol producers are offloading some corn and counting on that safrinha crop to come in. Am I rooting for the safrinha crop to fail? I got to be honest with you, I am. I hate to be that way, but if it did, I think you're going to see a really good opportunity for us to export corn through the summer and into the fall, because we're basically going to be the major player left. And so we'll have to monitor that safrinha crop closely. It looks like they got a big one in the ground, but we'll have to see how it goes. In April and May are the key months to monitor that, so that's something to pay attention to. What was the other part of that? That's about it. I think they're going to always be competitors. They're not going away. And it's just, how big is their crop going to be?
All right, Gary, one last question for you. This comes from the audience. You've been talking about cash rents needing to come down for quite some time. Hasn't happened yet. Do you think it will?
Yeah, that's a good question. We obviously haven't seen cash rents come down in the past several years. In the past several years, MFP payments have really helped cushion the blow of lower prices. Now with this COVID-19, we're sort of piling on bad news, and so we're looking at lower prices again for both corn and soybeans. We've had now the trade difficulties. Now we had COVID-19, and I would agree with Todd, it's going to be longer run than we might think. I mean, even if we get we're not going to be getting back to normal this summer. Driving will be down, and I'm not sure that driving or eating out or anything along that nature is going to come back to anything near normal for a year. How long that goes on, I would begin to expect cash rents to decline this fall, and it really does depend on how large of an aid package the federal government comes in with. Again, at the prices that we are looking at, if we just have the same levels of support as we did last year, we will be looking at negative returns. So something in combination with MFP-like 2019 will have to happen this year. Otherwise, we are going to see serious declines in financial health on farms. That is when we will likely see cash rents come down. And so there's a pretty good possibility of that, but we'll wait and see about that as well.
A quick reminder as we wrap up that there will be a survey that pops up as we close this out. Please do fill that out for us. And I'd like to thank both Gary Schnitkey and Todd Hubbs for joining us today. You've been watching and listening to a FarmDoc Daily webinar. I'm Illinois Extension's Todd Gleason.